Today's extended trading idea focuses on NVIDIA, a company that sits right at the center of the AI and digital infrastructure megatrend. Now, over the past year, NVIDIA has been one of the key drivers of global equity performance as demand for AI chips, data centers, and high-performance computing has greatly accelerated. But as we move into April, with markets having digested first quarter positioning and attention shifting towards the next phase of growth, the key question becomes, has NVIDIA already captured the bulk of the AI opportunity? Or is this still an early stage in a much longer structural cycle? Now, to answer that, we're going to step away from the headlines and start looking at some of the data. Now, you'll see on screen here a NVIDIA full year seasonal chart. Now, this chart shows NVIDIA's seasonal performance over the full year. And what stands out is that the performance tends to build gradually through the early part of the year. You can see from early January into the start of April, there is a pretty strong return of 17.81%. And that performance increases further into the middle of the year, where we typically see more of a consistent upside from April the 1st towards the end of August. You can see there the average return is 34.87% with an 80% winning trade percentage. Beyond that, as you go in towards the end of the year, October to December, you can see that the average return is around 8%. So it's a steadier, more of a consolidation period, and there's less consistent directional movements in the last part of the year. So from a seasonal perspective, this suggests that NVIDIA has historically rewarded positioning earlier in the cycle rather than chasing strength later in the year. And this middle period from April through to end of July, end of August tends to be the strongest seasonal period of the full year seasonal chart. Now let's compare NVIDIA to the NASDAQ 100, just to add some context. Now, NVIDIA tends to show more pronounced and concentrated moves than the NASDAQ 100. We're going to use SeasonX's comparison feature here, where we're just going to click on compare, and then we have the option to compare different instruments. And we're now going to compare the overall NASDAQ index with NVIDIA. And what we're going to see is that the NASDAQ, by comparison, typically moves in a smoother and more gradual fashion. So if we look here, first part of the year, January to March, we see that the NASDAQ has an average return of 2.63%, whereas NVIDIA has an average return of 17.81%. If we take that stronger period in the middle of the full seasonal year, sort of from the start of April through to the end of August, you can see that the NVIDIA has an average return of 33% with this from this period shown, which is the 2nd of April to the 2nd of September, whereas the NASDAQ has 11.85%. Finally, with the final part of the year, from October through to the end of December, typically NVIDIA has that more consolidation period, and the NASDAQ, you can see, has 4.16%. So what this tells us is that NVIDIA is not just following the index. NVIDIA has historically led the NASDAQ 100, particularly when growth expectations are being repriced. So when NVIDIA is strong, it often pulls the whole NASDAQ 100 higher rather than simply just participating in the broader move. Let's now check and compare the technology sector for the S&P 500. And what you'll see, like NVIDIA, the sector tends to perform well, right, in the first part of the year, average return of 2.87%. And that's often confirmed by strength in the middle of the year. See, start of April through to end of August, average return of 13.55%. But again, the difference here is the intensity. If we use the compare function and just look at NVIDIA by looking at the instrument here, we just type in NVIDIA, and now we can quickly, with the click of a button, compare the two. You can see in this strong period, the technology sector has an average return of 13.55%, but it's dwarfed by NVIDIA's average return of over 34%. Again, towards the first part of the year, the technology sector, you can see here has an average return of 3.08%, whereas NVIDIA has an 18.48%. So the key difference here is in the intensity of the move. NVIDIA's moves tend to be stronger and more concentrated, reflecting its direct positioning at the center of AI demand. So while the sector provides the tailwind, NVIDIA has historically acted as a high beta expression of that theme, which means it carries greater potential for upside and greater potential too for significant losses. So from a fundamental perspective, where is NVIDIA sitting? It's sitting right at the intersection of several powerful forces. There's continued AI investment from hyperscalers. There's rising demand for computer power. There's a global race now to secure semiconductor supply chains. But the narrative is shifting somewhat. Markets are no longer asking whether artificial intelligence is real, but they're asking things like, well, who's going to control the supply chain? Where does the pricing power sit? How sustainable is the current demand? And this brings in the concept of strategic autonomy, the idea that control over chips, manufacturing, and infrastructure is becoming a geopolitical priority. And that's where names like TSMC and ASML enter the conversation. But NVIDIA remains the front-end expression of that demand. So at the same time, leadership at this stage of the cycle is really not guaranteed. Markets are very sensitive now to valuations, expected returns. Any shift in capital expenditure is being closely looked at by the market. And even structurally strong companies can enter phases of consolidation if expectations become too stretched. So as we look at this and we start comparing NVIDIA with the NASDAQ, what we see is that NVIDIA tends to lead the broader index, and that macro backdrop is still there in place for AI investment. But the key question is this: is NVIDIA still the most effective way to express the AI infrastructure theme? Or does history suggest a phase where leadership begins to broaden now across the sector? Now, obviously, no one can predict the future, particularly in so many uncertain macro narratives circulating at the moment. But seasonality does help investors understand not just where opportunities may lie, but when they have historically tended to emerge. So we can see now that NVIDIA is in a strong period. If you take from 18th of April through to the 31st of August, there's an 80% winning trade percentage and an average return of 36.59%. What's also quite useful to see is years where we've had a maximum drop, but the return has still been profitable. So in 2019, we had a maximum drop of 28.11%, and it was a negatively performing year, 11.69%. We had 33% maximum drop when it was a negative performing year of 30.69%. So you can see the volatility. But every other year was positive. So straight away, this tells us that should we have a drop of around 10% from the middle of April, historically, drops of that size have provided dip buying opportunities. So investors should be aware that from a seasonal perspective, NVIDIA is coming into a very strong period, and drops of 10% have historically been dips that have been bought. So that could provide good dip buying opportunities should they present themselves in this strong seasonal window that is appearing. Investors are also cautioned that the maximum loss has still been substantial, so risk management must of course always be used.